Billionaire investor Bill Ackman just sold his entire Chipotle position, but what he doesn't know is he might have just sold at the bottom. And I'm not going to waste anybody's time in today's video, so here's the full math on how Chipotle hits $140 per share, and it's exactly what we're going to cover in today's video. I have real experience working with buy and sell side investors on Wall Street, managing multi-million-dollar positions in a setup just like this one. So if that sounds interesting, these videos are designed to level up your investing and trading edge in 2026. So let's go. There's a key difference between investing in a stock and investing in a business, and that's exactly what we're going to use as a framework to figure out what is going on with the share price of Chipotle and to see if the fundamentals of the company are still intact. Chipotle has definitely not been a great investment over the past couple of years, with the stock still down around 40 to 50% from its prior all-time high. And I wanted to start with the chart to get an understanding for if price has disconnected from the fundamentals and understand what's actually going on with the business of Chipotle today and how exactly can it even possibly hit $140 per share if the stock has just been a total underperformer versus the overall market. And that's the skill set I hope you continue to come back to my channel for and to figure out what's actually going on in the markets and driving the share prices. I've already done the work for you guys, and in Chipotle's case, they've definitely seen a sharp sales slowdown, and they're leaning into what everybody's been calling the K-shaped economy, segmenting the higher end consumers from the lower end consumers. And the big news that came out of their Q4 earnings, which we're going to discuss, is a recipe for growth strategy, which is going to redefine the business and re-accelerate them into higher profitability. And that vision was laid out by their management team, which we're going to discuss the turnover that has been happening and to figure out the valuation targets and where we should be buying. So the number one reason Chipotle shares have been under pressure is to look at their comparable restaurant sales performance, which takes the same group of stores and compares them to the same group of the prior period to figure out the year-over-year growth rate between the two. Over time, comparable sales usually trend up, as you could see in the blue bars on the chart there, but recently there's definitely been some really poor performance relative to history, and this has been a pretty big upset to investors, as Chipotle has generally been seen as a consistently growing company, posting really strong numbers, but on the right-hand side of my screen throughout all of 2025, their performance has just been pretty terrible, and the last time that they even saw negative declines in sales all the way back during the pandemic era in 2020. And the disappointing thing is, you could have actually seen this coming if you actually followed the earnings releases and the management commentary that they put in them starting all the way back in Q4 of 2024. Every bullet point I have outlined here is management discussing what they thought the full year of 2025 would be, and you can see the revisions in language over time. Starting in Q4 of 2024, they thought that the full year was going to end in the low to mid single digit growth range, which quickly got revised to a low single digit to about flat, to leading to a sales decline in Q3, which is pretty much what happened on the full year. And comparing that to today, we look at their Q4 2025 earnings and see that for 2026, management still expects sales to be about flat. So it's pretty clear to me that the biggest KPI driving the stock right now is their comparable same-store sale performance, which you could see every time they reported earnings the past couple of times. There's been massive moves to the downside as investors just do not understand where the direction of the company is moving. And if we actually pull up the Wall Street expectations, looking at that next couple of years of sales, those have continued to come off over time as well, which price does follow earnings and is exactly what we're seeing in Chipotle's case, as those revisions got revised lower, the share price went down with it. If you live in the United States, you're definitely wondering why we have not seen a recession yet, and if it's just canceled in general, because the K-shaped economy is a real thing, and Chipotle is seeing it as well. If you look at their management commentary once again, they stated that 60% of their core customer earns over $100,000, and that's leading to that K-shaped in the charts below provided by Bank of America, and they are significantly outperforming the middle and lower in both the spending and increase in income categories. And that's what Chipotle is potentially leaning towards, as they do know that 60% of their customers are in the higher end of the consumer, and they want to position the business to cater to them as much as possible. But realistically, this may have rubbed Wall Street the wrong way, because you're forgetting 40% of your consumers, and it's not like more people are just coming out and making $100,000 every single day. And this is not a story unique to Chipotle. If you think about the other 40% of their consumer, which is low to middle income, even Starbucks, Wendy's, and McDonald's, they all have commentary out there saying that we need those consumers, and that's why they have value menus in the first place. And what investors don't understand about Chipotle is if you're just going to completely ditch 40% of your population. So the core story of Chipotle right now is a decline in sales growth and also the K-shaped economy, as their composition of sales is also changing. But going back to their recent earnings release, their Q4 and full year of 2025, they outlined their recipe for growth strategy, which is going to essentially change the whole argument in the favor favor of Chipotle turning back into a growth company. And just to level set everything, the company is still very profitable. They have a really good operating model, and it's safe to say that they're not going out of business anytime soon, as they only continue to reinvest organically and open more stores over time, leading to still positive earnings per share numbers. And once again, Chipotle is not isolated here, as the fact that operating expenses continue to go up, including food and labor, as well as impacts from tariffs, as they do have to import a lot of their ingredients. So we're definitely going to have to keep an eye on their margins and see if those remain consistent over time. And like I said, Chipotle is a very profitable company, and they definitely have a very good shareholder focus, returning a ton of capital, in this case $2.4 billion on the year, back to shareholders in the terms of share buybacks. And going back to the valuation, how did I even come up with these numbers in the first place? And that's what we're going to discuss right now. Is it's all highlighted from management in their recipe for growth strategy. On the left-hand side of the screen, they want to grow their average unit volume, which is the revenue generated per store, to $4 million each across 7,000 North America restaurants, which does not include the international restaurants that they're going to continue to expand. And also they want to increase their restaurant operating margin to 30%. And these targets are pretty out there. And we do know that management also comments on the fact that their sales are going to be pretty much flat for 2026. I went back to 2025 and I gathered the numbers that we're seeing today. So they're only doing 3.1 million per rooftop at 4,000 locations and a 25% operating margin. Even if you don't believe that Chipotle will hit these targets long term, that's actually the reason why I find this story also fascinating, because if they actually do hit those expectations and blow Wall Street out of the water, that's going to definitely send the shares a lot higher in my opinion. And realistically, opening more restaurants is probably the easiest of the targets that they have out there. All you have to do is just hit copy and paste on your real estate and probably see a payback period over 1 to 5 years, depending on your location and market. But the targets that I'm really interested in are the average unit volume per store and the operating margin, which they do have a lot of growth drivers going for them, which they also highlight in the presentation. Moving on to installing more Chipotlanes, which is the digital order pickup area. And they do like to continue to include these across their footprint, as the number of transactions that are online sales continues to go up over time. And even comparing that to 2019, it was only 18% at the time. And they're not just building Chipotlanes, but they're also upgrading the entire kitchen and staffing of each store. On the left-hand side, they discuss their high efficiency equipment package, which includes better tasting food and overall guest satisfaction, as I'm guessing people just don't have to wait in line as long. They have 350 restaurants that have the upgraded equipment today, and they expect 2,000 by year end, which is approximately half of their footprint. So not only will the ingredients be organic, but the growth will be as well. And that's actually the largest driver of Chipotle, and why the shares have only skyrocketed higher over the past couple of years is when they transition back to reinventing their menu. And they're getting pretty creative with how they're doing it, coming out with different types of dips. Also the Chipotle Build Your Own, which is a multi-family meal, and more recently coming out with a new monetization technique of their already existing protein. And I'm not saying they're doing a great job at everything, especially with this protein cup. Investors are definitely highlighting the fact that you're skipping out on 40% of your consumer, which really just wants a $5 burrito and not the same meat just within a cup. And the confusion for Chipotle doesn't even end at the menu. It actually goes back to who's even behind the grill. If we look at the prior management on the left-hand side of the screen, there's been a ton of turnover in the past couple of years. You had the prior CEO, Brian Niccol, leave for Starbucks, the longtime CFO retiring, their chief marketing officer and their chief legal officer both retiring in the past couple of months. And on the right-hand side of the screen, it's pretty much an entire new season with an entire new cast, and they're still searching for their CMO. So this leaves investors a bit confused as well, because we just don't know what the results of an entirely new management team are going to look like. So Chipotle is in a very good position long term. If we think about that, 2025 was a really bad year for them. 2026 might be a little bit better if their number one KPI, which is their comparable store sale growth, will continue to accelerate and not see any signs of slowdown. That will be a big positive sign for investors. We also discussed the K-shaped economy, the recipe for growth, who management is, and that leads us all to the final valuation target, which if we compare that to Wall Street expectations, they're only pricing in $57 per share on the high end. So everything that we just discussed in today's video has definitely not made its way into the share price yet. And this isn't the only way that Chipotle gets to $140 per share or above 100 long term. If we think about that, we do know that management's targets are $4 million rooftop at 7,000 locations. That's going to give you $28 billion in sales, which is nowhere near the Wall Street expectation today. And looking at the next 12-month price to sales ratio, which has historically been a median of about 5 turns, we can multiply the sales and get $140 billion. And this is where my model incorporates a pretty aggressive decline in share count, but we do know that Chipotle continues to only invest their capital back to shareholders. So if they're able to get around 20% of their diluted shares outstanding reduced, that's going to give you a 270% upside, guys. So please let me know if you agree with that take down below, if you would modify these assumptions anyway, assuming more or less sales growth, and check out the other stock analysis videos, which you can find on the screen now.